This indicator shows exactly where the trend will reverse. Here's a recent trade I just closed, a massive 40 candle bullish run that netted incredible profits. Here, a precision short that captured 35 candles of downward movement. How did I know this explosive move was about to happen? Because of something most traders completely overlook, the actual duration of market trends. While everyone's obsessing over support and resistance levels, I'm using a tool that tells me exactly how long the next trend will last. And today, I'm revealing this approach that completely transformed my trading results. Look at this chart right here. After this bearish trend exhausted itself, the market started its upward climb. But here's what makes this absolutely fascinating. This indicator didn't just show us that the bearish trend was ending, but it goes beyond that and actually predicts that this bullish trend would continue for a specific number of candles. When we let the market play out, the price didn't just go up for the predicted number of candles, it went way beyond that forecast. So while that initial prediction alone would have been a profitable upward move, the market completely exceeded expectations and climbed for a total of significantly more candles than originally forecasted. Now watch what happens next. Here we had another bearish trend starting to develop. The indicator immediately flagged exactly where this bullish trend would reverse and provided its prediction for how many candles the market would decline. Let's see if it matches the forecast or if we get another surprise. The prediction was for a specific number of candles, but look at this. It actually went down even more candles than predicted. What you're witnessing is the power of the Trend Duration Forecast Indicator by Chart Prime. Let me walk you through what this indicator actually does and how you can integrate it into your trading arsenal. If you find real value in what I'm sharing today, smash that like button. For you, it's 2 seconds of effort, but for me, it means the world. We're working on TradingView. If you don't have it yet, I'll leave a link in the description. First, open a chart of any pair on the 15-minute time frame. In the Indicators window, search for Trend Duration Forecast by Chart Prime and add it to your chart. The best part? It's completely free. Here's how this powerful tool actually works. The Trend Duration Forecast detects new trends using an HMA, whole moving average, counts exactly how many bars each completed trend lasted, and then projects a likely length for the current market leg. The Hall Moving Average is a specialized indicator created by Alan Hall that eliminates almost all the lag you get with traditional moving averages while keeping the line smooth. This means it detects trend changes faster and more accurately than any standard SMA or EMA, giving us the perfect foundation for precise trend duration calculations. As the move develops in real time, it updates a live length label and shows you a probable length extension so you can determine whether the current push is in its early stages, middle phase, or approaching exhaustion. You'll also notice a small table that logs previous uptrend and downtrend durations plus running averages so you can see historical context at a glance. Green indicates uptrends, red marks downtrends. Simple and instant visual feedback. Now let's break down the key components of this indicator system. The trend ribbon is your first signal. It displays green when the market is bullish and red during bearish conditions. But here's where it gets really interesting. During transitions between bullish and bearish phases, you'll notice specific numbers appearing. These numbers indicate the actual length of individual trends measured in exact candle counts. For example, this number represents the total candles during the entire bullish trend. You can actually verify this yourself by manually counting the candles. Then this number shows the candle count during this specific bearish trend. Each individual trend gets labeled so you can know precisely how long that trend lasted. This data gets automatically tabulated in this reference table. The most recent trend appears at number 10. So you can see this candle count. The length of this trend has been recorded here at position number 10. Notice this is in the bullish column since the table separates bullish and bearish trend data. In the bullish column, you'll only see numbers for bullish trends. This is the latest bullish trend with its candle count. The previous bullish trend shows up here with its corresponding candle count. This tabulation of past trend lengths is absolutely crucial because the indicator uses this historical data to calculate average trend lengths for forecasting purposes. If we're currently in a bearish trend, the average of the past 10 trend lengths becomes the forecast for the probable length of the next trend. As this average changes with new data, the indicator continuously updates its forecast, attempting to predict the length of upcoming trends. The methodology is surprisingly straightforward, yet incredibly effective. Let's examine the settings that control this indicator's behavior. But first, let me share something crazy. What if I told you watching football could literally make you money? Wait, what? That's impossible. It is with Ultima Markets and Inter Milan. Dude, this is insane. When Inter wins, you get 1.5% extra profits. It's like getting paid to celebrate. When they lose, you get a $50 voucher. So basically, you're crying, but into money. When they draw, well, nobody's happy, but at least you didn't lose anything. But wait, there's a Christmas lottery too. Trade with Ultima, get a ticket, and maybe win big. Look, I don't know who thought let's mix football with trading profits, but they're a genius. Oh, and before you ask, yes, they're legit. FCA, ASIC, all the big licenses covered. Plus, they've got up to 1 million in fund protection because, you know, safety first. And on top of that, I convinced Ultima Markets to give away deposit bonuses. The 10 most heartfelt comments under this video will win. Show some love. Click the link in the description to discover all the juicy details. Trust me, you don't want to miss this. Alright, let's get back to the video. The smoothing length controls how much the HMA is smoothed before the tool determines direction. The default of 50 provides a balanced setting for the 15-minute time frame on most pairs. Trend detection sensitivity changes how quickly the ribbon flips color. Lower numbers create faster reactions, while higher numbers filter out more market noise. A setting of 3 provides responsive feedback without being overly jumpy. Trend sample size tells the script how many past trends to include when calculating forecasts. The default of 10 gives you a stable average without overfitting to just 1 or 2 outlier trends. You can also customize the colors for uptrends and downtrends. Now I'm going to reveal an incredible strategy that combines this trend duration forecasting with another powerful technical tool. The main concept behind this approach involves adding the linear regression channel to predict trend reversals based on linear regression band functions that mark zones where price becomes overextended, either oversold or overbought conditions, and then combining that analysis with the trend forecast to take high probability positions. Click on the Indicators tab at the top of your screen, and in the search box, type in Linear Regression Channel. You're looking specifically for the one published by Chart Prime. When you see it, just click to add it to your chart. This tool uses linear regression mathematics to create visual channels and bands right on your price chart. What you get is a clear view of the dominant trend, precise identification of stretched market conditions, and reliable hints about the next probable price direction. Looking at your chart now, you'll notice these channel structures and bands overlaid on the price action. The central channel reveals the overall market direction, with red coloring the lower section and blue highlighting the upper section. You get instant visual feedback on market flow. The linear regression bands function as your key boundaries, marking the zones where price becomes stretched beyond normal levels. Price near the top band signals overbought territory, while price near the bottom band indicates oversold conditions. Here's what makes this interesting. When price visits that lower band, it means sellers have completely lost steam. This becomes a really attractive area to start looking for buy opportunities. On the flip side, when price hits that upper band, buyers are exhausted. That's where you want to be thinking about potential sells. But what happens when price actually breaks outside these bands? That's signaling an extremely strong push, and price has entered what I call no man's land. To help you figure out when price is going to snap back into the normal range after one of these breaks, the indicator plots these reversal diamond signals. Let me explain how this works. If price breaks below that lower band and then you see a blue diamond pop up, that's the indicator telling you the price is about to reverse and head back up into the channel. For short trades, it's the opposite scenario. If price breaks above the upper band in an uptrend and a red diamond appears, that's your signal that a reversal back down into the channel is coming. There's another feature I really like here. The price bars themselves are color-coded. This gives you an additional quick visual, almost like a heat map, showing whether the price action is bullish, bearish, or neutral based on where it sits within the regression structure. You'll also spot these directional arrows that appear based on a future projection feature, giving you hints about the expected direction of price movement. Let me walk you through the settings so you understand what drives this indicator. Click the gear icon to open the settings panel. In the Inputs tab, look at the Settings Band section first. There's a checkbox labeled Plot Linear Regression Bands, enabled by default, which creates those outer boundary bands. Just beneath that sits the length parameter at 150. This determines how many historical bars the indicator analyzes when building the bands. Higher values produce smoother, wider bands that respond slowly. Lower values create tighter bands that react faster to recent movement. The deviation linear regression bands parameter sits at 3. This setting determines bandwidth. Increase it to capture larger price swings with wider bands. Decrease it for tighter bands closer to center. In the settings channel section, you'll find plot linear regression channel unchecked initially. Enable this to display the central trend channel. This section includes its own channel length at 150 and deviation linear regression channel at 1, governing its historical lookback and width dimensions. Scroll to the future projection channel area where both plot future projection of linear regression and plot arrow direction start unchecked. Activate these to reveal the forecast line and directional arrows on your chart. Each comes with dedicated length and deviation controls for fine-tuning the projection calculations. At the bottom, the Inputs and Status Line checkbox determines whether indicator values display on your chart status line. In the Style tab, multiple toggle options let you control visual elements. The bar heat map display, bar coloring, diamond markers, labels, fill patterns, and line visibility. Make your adjustments, then confirm with OK. Alright, theory is one thing, but let me walk you through some real chart examples so you can see exactly how I'd execute trades using this indicator. How does this strategy work for taking long positions? The process is remarkably straightforward. You want to identify a bearish trend first. Doesn't matter how long it's been running as long as the trend ribbon is showing red. During that bearish trend, watch for price to touch and dip slightly beneath the lower regression band. Once price reaches oversold territory down at that band, and we've got a reversal diamond signal lighting up, we start monitoring for the ribbon changing color from red to green. When it changes to green, that marks our entry point. At the time the ribbon turns green, also verify that price isn't yet at the overbought level. For short positions, you execute the opposite approach. Start with the ribbon showing green, wait for price to reach the upper linear regression band, creating overbought conditions, and watch for a red diamond to appear. When the ribbon turns red, enter on a strong bearish candle while ensuring price isn't yet oversold. This combination gives you multiple confirmations working together: trend direction change, regression band extremes, and diamond reversal signals all aligning for high probability trade entries. If you found value in this video, drop a like, it is very important for me. I'll see you guys next time.